Welcome back to Morning Trade Live, everybody. Let's focus now in on crypto. Joining us, I'm pleased to say, is Ben Werkman, who is the Chief Investment Officer at Swan Bitcoin. I'm so glad to have you with us on a day like today when things are a little bit quiet on the equities front, but we have seen actually the price of Bitcoin picking up. What is that telling you?
It's telling me that there continues to be strength in Bitcoin, and there's a ton of demand that's entering the market. And you've seen that with all the announcements and the emergence of all these Bitcoin treasury companies, is that these corporations that are adopting Bitcoin as their reserve asset on their balance sheet, they're providing a higher structural floor for Bitcoin. So you're not seeing the same drawdowns you used to see when there was weakness in the market. Typically, you would have expected tariff announcements like we saw yesterday to start having Bitcoin trade like a risk asset, but it stayed really resilient, and I think today it's trading just below 109,000, so it's been holding up really well.
Yeah, it absolutely has, and I suppose that sort of gives us a sense of how this asset class really trades right now, particularly because we haven't seen it having to undergo extreme duress just yet, but certainly in these sort of minor bouts of volatility, we do see some interesting trends there. Back to obviously the tariff announcement, we've also had the big beautiful bill too. So from a headline risk standpoint, how are you seeing all these stories feeding into the broader narrative for the crypto space?
Bitcoin's picked up a lot of momentum as a store of value asset. You constantly see it compared to gold, and one of the things that you're combating against with a store of value asset is the devaluation in the US dollar. So when the one big beautiful bill came out and got passed, what you saw was a big increase in spending. It was going to add $2.8 trillion to the US deficit, and people are starting to get nervous about that. We're constantly looking for that moment where we think the politicians are going to come and they're going to right-size the budget and they're going to balance things, but we haven't seen that. So what we can depend on is inflation and devaluation in the dollar, and because of that, people are looking for alternatives. And one of those alternatives in the digital age that they're looking for is Bitcoin. It's got all the properties that gold has, except it's made for the modern age and for the digital age. So absolute scarcity and supply is one of the things that makes it highly desirable for both individuals, corporations, and nation states. You're seeing everyone come to the table to play in Bitcoin.
That's right. Obviously, we've seen a lot more sort of mainstream adoption, the institutional money coming in as well as not to mention, obviously, a more crypto-friendly White House too. Do you believe that's going to continue to drive things forward, or does it need a little bit more of a tailwind?
I think it's going to continue to drive things forward. You've seen so many barriers move out of the way of Bitcoin and the other digital asset space where they're no longer thwarting innovation.
Right.
They're embracing it now. And if the U.S. wants to be a leader, that's what they need to do. And you're seeing that through several of the bills and the acts that are coming through. You've got the Clarity Act that's coming out now. That's going to start putting some real definitive lines around these different types of assets and classifying them and telling them how the reporting needs to happen. So they're getting acceptance now, and that's going to continue to provide tailwinds. But that acceptance is also driving the adoption into corporations. One of the things that was holding it back was there was so much regulatory uncertainty in the past, and so it was a very difficult decision for executives to decide that they were going to embrace Bitcoin as a part of their own corporate strategy, but now you're seeing it happen in droves. So just this morning you saw an announcement, $384 million raised by a company called Sequans, who's going to be starting their own Bitcoin treasury. And it just shows that these executives that are out there, and the Sequans management team is among them, are really believing in Bitcoin as digital capital, and they're wanting to make that a core part of their business now.
Talk to us about this sort of Treasuries playbook, because it is something that's propped up around 2020, but didn't really, I suppose, become something that we talked about until about 6 months ago. It is fairly nascent, you could say. So talk to us about what we're seeing here and how much traction it's got.
Yeah, 5 years sounds like a long time when you say it, but with all the activity that's been happening recently, it really feels like more of a recent phenomenon than it is. Strategy was clearly the pioneer here, and Michael Saylor really viewed this as a way to reinvent a company that he deemed a zombie company. They'd lost the growth in the core business, and they needed a way to reinvent themselves. And what he found is that because of that absolute scarcity in Bitcoin and the continuous devaluation of the dollar, he had to turn to the balance sheet to drive value for his shareholders. So he changed the metrics and the KPIs that his company was following, and he now focuses on building the Bitcoin per share. So investors are now looking at how corporations are bringing Bitcoin into their own strategic plans to build that intrinsic value underneath each of their shares by undertaking transactions in the capital markets, whether that's issuing equity, issuing bonds, issuing preferred equity offerings. And through each of those transactions, the primary goal is to raise the Bitcoin per share and bring more value in for your shareholders.
Okay, and how sustainable is this when it comes to coin treasuries? Is this something that we see has a very long runway? Because I was reading some analyst notes out suggesting that perhaps some of the companies that are getting into it more recently have a little bit less of a lifespan, potentially. Does this have legs?
This has legs, and it has legs for a long time. I think that people see the announcements and they start to assume that this market's more mature already than it is. But what you have to realize is there's relatively little scale out there. Strategy is really the only company of scale, where they're about $100 billion, $120 billion company now. The rest of them are much smaller. A lot of them are below 500 million in market cap still. So there's a lot of activity that's yet to be seen here, and I think that now that the playbook is evolving and they're seeing the power of issuing preferred equities and being able to tailor-make products for institutional investors, where there's $100 trillion of institutional capital that can't come and buy Bitcoin itself, but it can buy equities and credit instruments. And that's the power that these companies are bringing to the market, is they're innovating around that space and bringing new, highly desirable assets into the market that they can participate in.
Yeah, it's fascinating, isn't it? And it's not just in the US. We have seen a sort of global adoption and expansion of this trend. Talk to us about that. Where are you seeing the most excitement around that?
You're seeing a significant amount of excitement in Japan.
Okay.
Japan has been a yield-starved country, but it's also one of the largest economies in the world. So a small hotel company called Metaplanet launched in Japan, and what they found was that they had an opportunity there because of the tax treatment of Bitcoin. So in Japan, if an individual is holding Bitcoin, their tax rate is going to be around 50%, but if they're holding it through their version of a retirement account, a NISA account, and they buy exposure through a corporation like Metaplanet, their taxes drop down to 20 and 25%. So there's a significant difference there that makes it highly desirable in that market. But with the preferred products and being able to offer yield to the market, yield is a problem worldwide. Countries are starved for yield, investors are starved for yield. And so these Bitcoin treasury companies being able to take advantage of the growth rate of Bitcoin relative to the devaluations in the dollar and provide those yields to the market is a huge service that's onboarding capital at a really rapid pace.
Yeah, it's interesting because you started this conversation off with, I suppose, the world becoming a little bit more digitally savvy as well. And Japan's a funny one because I think they only phased out floppy disks a couple of years ago. But no, that's such an interesting anecdote. And so what's next for this space then? Now that more of the adoption, where do we go from here?
I think this started as a very small movement. We saw small companies that were adopting this, but I'm expecting that trend to grow. And I think you're going to see more and more larger corporations adopting this, not necessarily the leveraged aspects of it and issuing securities, but replacing the US dollar on their balance sheet with something that's far more resilient in Bitcoin. I think that's going to be a trend we're going to see throughout the next several years. But Bitcoin's not done with individuals either. And at Swan, we see it all the time. We're always recommending that Bitcoin becomes the foundation of your portfolio. You need to protect the value you've created through your time and efforts. And to do that, you can't hold it in an asset that's constantly devaluing from underneath you. So Bitcoin's providing a core service and a really high degree of utility in combating against that devaluation of the US dollar that most people are storing their savings in.
Yeah, it's interesting, isn't it? And I suppose it's a boring question, but a very important question. How do you look at sort of the macro picture fitting into this as well, particularly when you see talk of interest rates coming down? How does that all factor into what you're seeing here as far as that trend?
Yeah, there's a saying in the Bitcoin world that is nothing stops this train. And all of the different activities you're seeing in the macro environments, whether it be changes in rates, whether it be the regulations, whether it be the spending, all of those things are leading back to positive support for Bitcoin and a lot of demand for Bitcoin. People are opting out of a system that they don't feel like they have total control over their own finances in. The same applies for corporations. The same applies for nations. Right? There's a lot of nations that got on a dollar standard and abandoned their own fiat currencies, and now they're looking for something that makes them sovereign again. And to do that, you've got one truly decentralized digital asset, and that's Bitcoin. So it's got a lot of runway from here.
Fascinating conversation. Thank you so much. I wish we could go on for longer, but unfortunately we've run out of time. That is Ben Werkman there, who is the Chief Investment Officer at Swan Bitcoin.